All right, welcome everyone to another Vine edition. I've got Donal McCarthy here with us, and we're going to be talking about real estate. Some new CPI inflation data has been released as well. We're just going to talk about what's going on in the market. We're kind of at the end of August. Historically, it's generally a slower market, but Donal, thanks for coming on. Thanks for sharing some time. How you been, man?
Thank you, Hugo. No, it's great to be here. Thank you so much for inviting me.
Yeah.
Looking
How's your summer been? How have you been finding things in the last couple of weeks, last couple of months, just on the real estate side?
Real estate actually always seems to have had an uptick. I think the sellers out there that are serious about selling for whatever reason, there's the motivation there to sell, whether they've bought a home or whether they just want to get out for whatever reason. They might be the demographic that are, may have taken a big hit in the stock market, and they just want to get out and get out of what real estate they're in now, downsize maybe. So there are very serious sellers out there, combined with there is a very serious demographic of buyer as well too. So they seem to be coming together if the price is right.
Yeah, we've had, over the last couple of months, we've definitely seen a bit of a shift where when the rates initially started going up, it was almost like a slowdown, like let's wait and see what's going on, and I'm going to push out any potential purchase or any potential sale a little bit further down. But now that we're seeing inflation figures were just released this week, and inflation is now sitting at 7.6%, so down from 8.1% from last month. It's a good sign, but I've been cautioning everyone, like, don't get too excited, because a lot of that drop in inflation is because gas prices have come down so much, and that represents a big chunk of the inflation data. But it's certainly a step in the right direction. It could mean that, the peak of rates, started to shift, and we have seen fixed rates come down a little bit. I've also been telling clients, listen, going into September doesn't mean that the Bank of Canada won't further increase rates, but I think the intention of those rate increases is to really hammer down inflation, not because I think things are getting ahead. It's really just to kind of make sure that inflation is coming down. So we have been recommending to clients, listen, you need to budget anywhere from 0.25% to 1% more of variable rate increases as part of your budget. But for the most part, I think there's a little bit of light at the end of the tunnel, which is why I think the real estate market seems to have a little bit more confidence, a little more bravado. And I didn't mention in the beginning, but Donal, you're on the Toronto market. I think that's kind of been your specialty. I know you work with a lot of investors as well. What's some data that you have that you can share with us to look at what?
Sure. Let me just share my screen here. Not the most attractive spreadsheet I've ever done, but anyways,
it's effective.
So one of the things that we always monitor, my admin staff on a Monday morning comes in and looks at what we call the absorption rates. And it's a very good indicators to tell us where we're heading in terms of whether we're in a seller's market, are we heading towards a buyer's market, or in the opposite direction. Okay. So what we're calculating is basically of, let's say here in the condo market or in the homes market, we're calculating how many units sold, let's say in Toronto, in the last week. Okay. And then you take a snapshot on the Monday morning and you say how many are currently available, basically, right? And the ratio of the two of those then spits you out weeks of inventory.
Yeah.
So how many weeks of inventory do we have in the market? If that's super tight, it means your market is absorbing new listings very, very quickly. That's a seller's market. If that weeks of inventory starts to increase and goes over 20, 24 weeks, you're all the way into a buyer's market, right? Because now you've several months of inventory, so that's going to take a while to be absorbed. So it means buyers are coming back up. So at the start of the year, February or March, you can see all here, the figures are in the 3s, 4s, okay? Whereas with our interest rate hikes coming all the way to August, we're up at 25 in condos and about 18. So we've pushed into the buyer's market in condos. We're still in that kind of that balanced market, but heading towards a buyer's market in real estate. So working with our buyers right now and our investors, we're saying great time to buy a condo because they're getting hit the hardest, the greatest supply in condos. Still houses, still in the balanced market. So it really depends on the motivation of the seller. If you're buying, you can find a seller who needs to get out. There are some great deals out there. And just a quick, does that sound
Yeah, well, just want to ask you now. Obviously, with any data, it's subject to interpreting it different ways. Now, if we were to sort of dive into that data a little bit more, are you seeing trends with maybe certain types of purchase prices, or maybe on the high end of the market? Do you see those absorption rates differently, or are there any like maybe
Yeah,
niche data points?
this is combining everything. It's not breaking down. But in the, let's say, the really high-priced properties, they don't seem to be taking as much of a hit, right? We're talking anything up to maybe about 2 million.
Okay.
That's what we're seeing, and that would be the majority of this data would be reflecting that, anyways, right? It would be a minority of data that would be in that, say, 3 to 4 to 5 to 10 million range. Okay. So the majority of this data reflects, the typical average, buyers, in the market,
Got it. Okay.
And then just a quick show of what I'm talking to people right now is our demand in the market. You can see this orange line here, that's demand. So the minute interest rates start to go up, we've come down in demand every month. So that's our buyer, right? That's our buyers stepping on the sidelines, like you say. Maybe they're coming back a little bit now. This is our supply. Our supply has also dwindled, and our prices since February in the GTA for housing stock has come down, would you believe, 20%.
Yeah.
And we'll see what happens in the fall time. I mean,
yeah.
My thoughts on prices is that they're still going to continue to drop if we do see those, that 1% rate hike.
Yeah, I think so.
But I get the sense there's some shoots of positivity with, like you say, inflation, and just what I'm seeing in the market now, if sellers are proactive and listen to their agents, we're getting the deals done. It's happening.
Yeah, what's interesting, Donal, is that like we're only 5 or 6 months into this whole rate increase environment. It hasn't really been that long in context of everything.
Yeah.
And in that short amount of time, we've seen rates go up about 2.25% on anyone who's got a variable rate. We've also seen fixed rates go up, roughly the same amount. So the rates have gone up in such a short period of time aggressively that people forget that it's only been about 5-6 months that we've seen this environment. But I think now that we're halfway through the year and coming out of the summer, which is generally a pretty busy time, I think, in my opinion, or at least what we're seeing, is there seems to be a little bit more confidence. Like the shift has gone from, I don't know how high rates are going to go. Are we going to go to 10%? And, all this madness, and I'm not going to buy real estate, to more like, okay, this is the new world for now. This is the new temporary higher rate environment, but the values have gone down quite a bit too. So we're seeing tons of people who are now shifting their mindset to, this is probably the best time frame to be buying real estate, because I'm paying 20-25% less depending on the market. And even though the rates are elevated, your actual monthly payment is roughly the same. We actually did a quick analysis on the average detached home in Toronto in February. It was like 1.7 million, and the average detached today is around 1.3 and change million. The down payment on each of those is, if you're looking at 20%, is now drastically smaller. It's about $80,000 difference from now and then. And even though the rates are almost 2.5% higher, the monthly payment is still a little bit lower today because the purchase price is a lot lower. So I think a lot of people forget, like, just because the rate's high, you have to look at the actual monthly payment, because that same asset that you wanted to buy in January, it's probably a lot cheaper now, which means your payments are cheaper, even though the rate is crazy. And that's what we've been trying to remind people is, take this as an opportunity. Don't get scared off, with the masses and the media. Actually peel back the curtain, and there's a lot of interesting properties there, and sellers are motivated. Like, this absorption rate data is interesting because a seller's probably very motivated to unload a property, and will take a very good offer and negotiate with them to find a deal. So
I know what I'm saying to buyers is, say, I'm going to wait for another 6 months. What are you telling or advising, your clients who are coming to you getting the mortgages? What are you saying?
I'm saying, buy now. What are you waiting for? 6 months from now, I think rates, I think my personal opinion is, I think we might see another increase before the end of the year. I don't know how much, whether it's 0.5% or 75 points or even 1%. It'll depend on the data. But I think, as the values of properties have come down, and there's this slow little shift of confidence in the market, I would be saying, if you're legitimately interested in buying real estate, you should get it now. And as long as you're holding it over the long term, you're more than fine. Because I think a lot of the damage and drop in values has probably already happened. Not that doesn't mean that we will see further drop. I just think a lot of it has already happened. So go out there, take advantage of that market, and get into a short-term mortgage solution. Maybe a 1 or 2 year rate is what we're telling people. Get into the home first, make sure you're comfortable with the payments. And then 1 or 2 years later, when we see a rebound in the market and maybe a drop in the rates as well, that's the opportunity to refinance. I've been telling people, don't wait till the market gets better and the rates start dropping, because then it's just, we're back to a higher, more expensive market. So anyways,
it'll be multiple offers again.
It'll be multiple offers. And that might take some time. That might not be until, who knows, the end of 23 or maybe 2024, to be honest. But yeah, this is a great opportunity. I wish I was buying my, the last property I purchased. I wish it was being done in this market, to be honest. But
it is what it is. You and me both. I bought in February at the peak.
So, but I'm not too concerned about it, because I know over the long term, all this stuff is stabilized. In a strong market like Toronto, for example, there's always that demand there over the long term. So this is just, people have to realize, like, this is all very short term. And a lot of what's happened has happened so quickly in a short amount of time. This doesn't indicate this is the future and this is the permanent world that we live in. So that's kind of my thoughts, though. But any takeaways for sellers? I know they're obviously having a hard time these days, but any advice or strategies that you've been sharing with them?
They just we have to be realistic.
Okay. Yeah.
If we're looking at our prices, and we're back to July of last year, right? So we only have data for up until July of 2022. We have to be realistic in pricing at that time last year, right? And looking at our competition is more important. Though, if we hit the market, we want to look at what's available around us, because that's who we have to beat.
Yeah, you're right. Because I think, clients sometimes will tell me, well, my neighbor sold the property for X amounts in February. I'm like, that data is irrelevant at this point.
Yeah. Oh, yeah.
It's irrelevant. It doesn't matter at this point. Now it's really what has sold recently, what's on the market, like you said. And you're right. I think being realistic is going to help a lot. And knowing that you're not going to sell in 1 week, very likely it's going to take that 20+ week time frame that you'll have to plan for.
We had a situation yesterday where, look, we had clients who had bought and had to sell, but I granted them the opportunity to at least try to 2 weeks at one price, even though I knew it was pushing the boundary a bit. We had 2 weeks of data and feedback from buyer agents, which precipitated a price drop. Now, a fairly severe price drop, and they were okay with that. It was a 6.5% drop on our asking price. That drop was serious enough to generate 2 offers within 24 hours of the drop.
Wow.
Right, so we actually ended up in a multiple offer scenario.
Well, they still exist. I think it's just having a good realtor, good strategies, and really understanding the market and being realistic. That's probably the main takeaway. Be realistic.
I mean, they didn't get February prices, but they were realistic, and there was the motivation there to move forward. They listened, and we achieved a result.
Cool. Well, hey, this is a really great update. Definitely want to keep checking in as the market continues to evolve and we get out of this, historical situation that we're in now, and try to get out of these times and, hopefully see a little bit more positive light and, some good data coming on the next couple quarters. So appreciate your time, Donal. Enjoy the rest of the summer, and I'll chat with you soon.
Thank you. Thank you, Hugo. Take care, man. Ciao, ciao.